Yo, boom. The king goes
Subscribe. Alright. Now what I'm going to do is I'm going to make a very short video explaining to you how market structure work. Explaining to you how to understand how the market really moves on each time frame. Alright. Um so first I'm going to show you this layout on the daily, and I'm going to explain it to you, and then I'm going to show you a layout on the 4 hour time frame, and I'm going to explain it to you. All right, so once again guys, subscribe. All right, so let me get into the video. When analyzing the market, we have to identify the highs and the lows. So I'm starting on the daily time frame. The higher the time frame, the better, because when I go on the lower time frame, it becomes too noisy and too complicated at times to really understand what the market is doing. But with the experience that I have though, I can like go on the 1 hour time frame, and I can like identify daily highs and daily lows, just like just plain, so it's not really 100% noisy for me anymore. But just to kind of do the thing the right way, we would start from the higher time frame. So let us identify the highs and the lows. Okay, so first we have to identify what is going on in the market. So we're doing VIX 75 right now. And on VIX 75, we realize that the market is going down. And how can we identify that the market is going down? By looking for highs and looking for lows. And when we realize that lows are being broken, and then lower highs are being created, that is when we know that the market is in a downtrend. All right, so this is a high and it's daily, as I say. This is our daily low. Price has broken this low here and created a new low. So that confirms that the market is still in a downtrend, and price now created a lower high, and that low, reason why it's called a lower high is because it's lower than this high right here. Okay, so yeah, lower high, lower low, and then we have a lower low. Price broke this low right here. All right, a lot of people might probably wonder if this is a high and this is a low. This is nothing. This is just probably like maybe like a 4 hour low. Let me look. Yeah, so it's a 4 hour low, and we don't identify that. I mean, it's a 4 hour high and a 4 hour low. So we don't really identify, we don't pay attention to that when we're on the daily time frame. We pay attention to the bigger moves, right? So as I said, we created a lower low. Now, what we want is that price is moving now. So we want to see price create a lower high. So we want to see price create a high that is lower than this high right here. Okay, so price should be trying to position itself to sell, but guess what? That does not have to happen. Price can continue to go up, right? Because the market can do whatever it wants to do. It's just you have to follow price, the movement of price. So say price is going up, we can still position ourselves to sell as long as price does not break this daily high. Let me repeat that again. Price can continue to buy in this case, and we will still try to position ourselves to sell, right? Because remember, we're in a downtrend, so we're looking for selling opportunities. So this downtrend that we're in, we have a high, we have our low, we have our low. We have a low, we have our high, we have our low, and now we want a high, right? That high will lead to a sell. So where am I? Yeah, so price can continue to buy And you see on the 4 hour time frame, you're just seeing a little push here. I mean, on the daily time frame, you're seeing a little push here. When you go on a 4 hour time frame, you're going to see this. This is what you're going to see. All right. Yeah. So now, yeah, as long as price does not break this daily high, we're good to go. But if price continues to go this and do this, and it breaks above our daily high, we will no longer position ourselves to sell. We will have to start positioning ourselves to buy because price is breaking daily high. It's breaking a significant high in the market. And this break will contribute to the market no longer wanting to sell because it has been selling, no longer wanting to sell, but wanting to change its course to start probably go up. So that is how we really understand how the market moves. This is market structure, and I will implore you guys to watch as many videos as much as possible on market structure. There's a lot of videos on the internet that really explains it. I used to watch a lot of these videos. When I realized that market structure was the way to go, that was when I dived in to watching market structure videos, and when the content creator was making sense, that was the video I was watching continuously. All right, so if you guys really want to trade simple, that's what you guys need to do. You don't need any indicators, you don't need anything else. As long as you can really identify the highs and lows on each time frame, I promise you, you'll be okay. All right, so being that we're looking for sell, and because price has not broken this daily, so we're looking to sell. What we're going to do now is we're going to go on the 4 hour time frame, guys. And when we go on the 4 hour time frame, we're going to analyze this push because this push is our pullback. And this push to the upside will be a uptrend on the 4 hour time frame. So let's go on the 4 hour time frame now. All right. So this is a 4 hour time frame. All right. So you position your chart, and our main focus is on this area right here. This is our main focus now, and we're still paying attention to this structure here, to our daily high, right? Because we know that once price remain below this daily high, we're good to go. We will just continue to position ourselves to sell. Now guys, if you check this out, let me remove this now. On the 4 hour time frame, guys, now you're going to identify highs and lows on this push. This is our important push now. So we identify our highs and our lows. So this is how you do. You know that this is your high and this is our low. This is our daily low right here. All right. Low daily. I mean 4 hours. Sorry. This is our high, and we have a higher low. And we have a higher high, and we have a higher low. And price is creating a higher high, and we definitely want to see a higher low, and then a higher high, and then a higher low, higher high, and then a higher low. All right. Now we use a trend line to kind of trace to see what to see what the market is doing, and market is going up. Now, so this is our trend line. If price should break our trend line, remember we would say this would have. Let me draw something better. See, price is doing this, it's doing this, doing this, and then all of a sudden you see this happen. when you see this break on a 4 hour time frame, and we should ensure that the candle low or 4 hour trend line. All right, and then not only that, sometimes we can enter aggressively. It depends on what's kind of going on to the left of the chart. Sometimes I enter aggressively and sometimes I get pulled back. Sometimes when I don't enter aggressively, I tend to lose the trade. But what you need to do is really focus on other technical analysis on the lower time frame. And I can't do that right now because the market is not positioned in that part as yet. So what I could do is whenever I am kind of anticipating to start into the market, I will do a video showing the lower time frame in that regard. All right. So say price close, we are going to position ourselves to sell. All right. So as I say, price when you're going to lower time frame though, when price close, you can use like a counter trend line and enter the market. After that counter trend line is broken, but that's a whole nother story, guys. You know, but I'm just showing you on the bigger picture now so that you can really understand this part of it. The entry part of it. I will soon teach you guys. As I say what I said not too long ago, that's how I'm going to be able to show you guys, or maybe I can make a video going back in past data and doing that. Okay, so we get the break, guys. That's a confirmation that we're going to enter, and when we enter, we can target back our low, and we put our stop loss where it's convenient to be placed at, right? And or then you can like do like a 1 to 3 risk reward. You don't have to do everything, because even if we're going to say that the market is going to come down, a lot of things can contribute to the market not even coming way down to here and probably doing this and then start exploding to the upside. So we can really just do like a 1 to 3 risk reward. So if we're going to risk, if we're planning to lose $20, we know that okay, we're going to make $60. So if you make $60, you can just come out of the market. All right. So yeah, basically that's it.
Yo, boom.